we on live? I think so. If not, I'm still recording, so I'll post the video. So cool. All right, everybody, welcome to the lunch break series. I'm Becky Jean Thompson from Coldwell Banker Realty. I have Nick Palermo from Movement Mortgage. He's going to answer all your loan questions and questions that have come in from the last couple of months, and people who have shot me texts and emails that aren't able to make it on today but have questions, and we'll review the housing market. This series is something that I'll do every 2 weeks for the next several months, hopefully throughout the rest of the year, to give you an update on the housing market and talk to industry professionals about what's going on in their neck of the woods and get some input and intel from them. So one of the biggest questions, I think, was how was the housing market in 2020? It was a roller coaster, right, Nick?
Oh, yeah, crazy. It's crazy as I've seen in the last 12 years, for sure, yeah.
Yeah, we sort of buckled up, I think, on everybody's end in the industry. Lots of ups and downs. Seller's market for the majority of the year, for sure.
Yeah.
Not enough inventory. So you have buyers who got pre-approvals, ready to buy, putting in multiple offers. One house that one of my buyers put an offer in on had 30 offers. So, yeah.
I mean, inventory was a problem before COVID, and then COVID came, and then it just exacerbated it, you know?
Yeah, absolutely.
And tough, yeah. I mean, I've had buyers approved for 8, 12 months, and they're just hard to compete, so.
It's true. So I think the hardest part about being a buyer was getting that pre-approval and then walking in and having 15 minutes maybe to make one of the biggest decisions, right? You walk in and you're like, is this the house? I'm not sure, is this the house? And you're like, you know, as an agent, I'm sorry, I need an answer like now. We need highest and best like now. So
yeah, gone are the days where it's like, hey, we like this house, let's sleep on it and figure out, you know, and sleep on it, it's gone. And it's tough, especially for first-time home buyers, you know, so much going through their mind and figuring out, you know, is this right? Is that right? And it's just, I feel bad, you know, I mean, I've had a lot of people, you know, and that's where working with a good agent that has your back really matters, because I've had a lot of people that have backed out, you know, a day or two after their offer, even before inspection, just by a remorse, you know, hey, I didn't know it was the right property, but my agent said I had to do this, that, or the other thing, you know, and you know, on your end, you got to be forceful about it, but you also have to be educational about it, you know, so they can kind of make the decision based on their needs and their wants rather than feeling forced upon it, you know, but it's tough. It's tough.
And I always say, you know, walking into a property, I'm looking at things very differently. So the buyer is looking at, is my couch going to fit here? And I'm looking at, you know, things from a different perspective, things they may not see because they're looking at, you know, will this fit? Will my kids' stuff fit? And I'm looking at more of how old is the furnace? Is the boiler going to break?
Right.
Are there cracks in the walls? Those sorts of things, you know, more structural real estate-y than, you know, decorations, are their stuff going to fit? So things that because you only have such a small span of time, you know, in an open house, or because the showings are 15 minutes back to back to back to back, and someone's already knocking at the door and you're halfway through the house. So
yeah, you know, you can, to that point, you can buy a new couch for $600, but the house is $250,000, you know, a little bit more important.
Yep, valid point. So interest rates compared to, so historic lows, we've seen that, you know, across the board, and everybody's shouting out OMG at this point. Between the end of last year and sort of now, as we're in the third full week of January, what are we seeing that's different?
So, and today is about the worst day you want to ask that question, right? I mean, a new regime coming in, you know, you're going to have somebody new that's going to be heading the chair and the Fed and all that. So I'd say TBD on what it's going to do. I will say they're very low, right? I mean, over the last 12 to 18 months, I mean, you've seen multiple record lows, and every time it hits a record low, everybody says, wow, this is, you know, it can't go any lower than that. Let's move now. And then 2 months later, hey, another record low, you know? So, I mean, I kind of keep an eye on, you know, the MBS market. The 10-year treasury is kind of really where you follow to see where rates are going to go. But again, today being what it is, we'll see what kind of happens in terms of, the new regime and what their outlook is on it and where they're going to go. But I do think they'll continue to stay low. I mean, one of the biggest driving forces behind the economy is the housing market, and driving that home. So I don't think you'll see an uptick because obviously with everything going on right now, consumer spending and people going out, not shopping, stuff like that, it's kind of one of the driving factors behind it. So I think you'll continue to see them stay low. I hate the question of where rates are going because nobody has a crystal ball and it's just tough, especially there's so many more outside factors influencing rates and pricing now than there normally is.
Yeah.
So it's just tough. But I mean, I always tell pre-approved buyers, like, here's where rates are today. Here's where your payment is. If you're comfortable with it, the difference in an eighth or a quarter of a rate, 15, 20 bucks a month, depending how much you're borrowing, it's not going to make or break something. So as long as you're comfortable where they are, then you want to get out and shop.
Yeah, absolutely. The challenges of being a buyer right now, I think we touched on that a bit about having to make faster decisions than they have had to make in the past. And I think, you touched upon it too, the wants versus the needs. So the rates are giving people the ability to buy more of a house.
Sure. Yeah, that's the thing I hear all the time, is because, right, I mean, the housing market typically, like when you're putting in an offer, you're going under asking price and you're negotiating. And, so buyers ask me all the time, like, well, I don't want to overpay for a house. It's listed for 220. I'm overpaying if I pay 240. At the end of the day, obviously, there's the appraisal contingencies and so they're selling for that high and they're going for that high and they're appraising that high. At the end of the day, everybody's saying, yes, it's a seller's market, but at the end of the day, right, like this time last year when rates were 3.5 or 4 and you're buying for 220 versus today you're paying 250 at a rate of 2.5, buyer net's the same payment or a little bit lower. So, at the end of the day, yes, it's a seller's market, but your buyers are still getting a good deal,
Right.
But it's tough, to kind of educate them and refocus their thinking on that part. I mean, it's there, but it's tough to kind of swallow that, especially when you're a first-time home buyer and you think you're overpaying, and so you got to kind of educate them and talk them through why it makes sense.
Yeah, absolutely. And I think keeping the wants and needs list realistic, even if that price seems to be higher than what they're willing to pay because of the market, well, I'm paying this much more. Look at my list. I don't have everything that I've wanted. So sort of taking that list and putting it in realistic terms, is this everything that you absolutely want, need, or can we switch?
How many buyers actually get everything they want or need though? I mean, it's almost doesn't exist. So there's always that give and take trade-off, right?
Yep. And short and long-term goals, I think coming up with how long are you planning to stay in the house? Is this a 4+ year house? Is this until retirement and maybe beyond? Is this just, sort of a stepping stone to something else? I think, it has a lot to do with how much they're willing to put in on a house.
Sure.
What else do we have here? So question came in about certain towns that have grants towards home ownership.
Mm-hmm. Yeah, so there's in Western Mass particularly, I think it's kind of where we're focusing on, but there's each kind of the major cities have their own version of a grant. So on those grants, right, so it's not like I don't approve you for the grant. You have to apply directly with the city. And each city has a certain amount that they're giving up to, like Springfield right now is giving up to 4,000, Chicopee's giving up to 5,000, but they both have their own underwriting criteria and underwriting guidelines. So the major ones are all doing it, Holyoke, Springfield, Chicopee, Westfield, they all have their own versions of those first-time homebuyer grants. But to kind of surmise them all under one umbrella, they all very similar. I mean, they're all kind of forgivable grants where if you live in the house for 5 years and you don't sell or refinance within that time frame, then typically it's forgiven in full after that 5-year period. Now, if you sell or refinance within that 5-year period, it's repayable at a percentage based on how long you owned it first. And then certain things like they do their own inspections, right? So the city, they have an inspector that'll come out make sure that the house is in the condition that's approvable by the city. They have maximum income limits, so you have to fall within low to median income for the area in which you're buying. And that depends on household size. So I know kind of the general qualifiers for each one of the programs. So I don't have to go into specifically each one, but those are the kind of the big things they look at, your income limits, condition of the property, and then there's always a maximum purchase price. Like typically it's right around 198 for a single family, around 230 for a multifamily, depending on it. So, but yeah, certainly something to take advantage for the first-time home buyers, especially if you can make it and you can qualify for it. It's a little bit more tedious of a lending process just because of those additional inspections and city underwrites and approvals. So it takes a little bit longer, but worth it.
Yeah, for sure. For
And
sure.
then the mass housing program is still out there. They're doing 100% financing. They do down payment assistance. They give up to 5%. With a maximum of, I believe it's 12,000. So you could essentially get, you can do an FHA loan, which is a 3.5% down payment, and mass housing will give you 5%. So they're covering the full down payment plus another 1.5 towards closing costs. It's especially helpful for your buyers that are limited on funds, because a lot of them are asking for seller concessions, right? So
right, which is not something that's really being, considered in the ball game in the seller's market.
Yeah, so if you're competing against 5 or 10 different offers and they're all asking for concessions and you can get away without it because you're utilizing it elsewhere, that makes you more competitive for sure.
Right. And when it comes to, closing costs in general, as an agent, we don't know precisely how much a bank is charging their fees or the appraiser fees or the attorney's fees. So we always quote 3 to 4% of the sale price of the home for a closing. And you're saying that, 1.5% will be paid for by mass housing. That's a good chunk. I mean, that could, if it's 3% for closing costs, that could be half. That's huge. Yeah, that is huge. So there was, I wanted to talk a little bit about renters. So I've helped a couple of long-term renters over the past year. One of them actually owned for 15 years before they bought a house. They just didn't think it was in their future. So as far as the loan process is concerned, when it comes to information that you need information from landlords?
Not typically, no.
Okay.
No, there's very few programs that require us to verify like rental history.
Yep.
If you do, generally speaking, you just have to verify the previous 12 months rents paid on time, but I haven't had a loan where I needed to verify rent in probably 2 or 3 years. Yeah.
So I was reading an article by the National Association of Realtors. One of their economists wrote that at the end of the third quarter of 2020, because they haven't come out with fourth quarter info yet, that 34% of Springfield metro renter households could afford to purchase a home. Like, wow, a third.
Yeah.
That's crazy.
But yeah, it's a good market to capitalize on.
Yeah.
I mean, you'd be surprised how many people I talk to today still have that old thing of like, I need 20% for a down payment. I can't buy a house without 20% down. It's just not true. And it hasn't been for a long time. So it's just a stigma out there that a lot of people say, well, I don't want to bother. I don't have money for down payment, but we talked about the grants. We talked about the mass housing. Like you can get into it with very minimal out of pocket. I mean, I've done USDA loans that are 100% financing, VA 100% financing, mass housing 100%, so there's a lot of 100% financing options out there. It's just talking with the right agent, talking with the right mortgage professional to educate and kind of figure out. And obviously, yeah, not everyone's going to qualify, but I say it never hurts to ask. It never hurts to apply. Maybe you don't qualify, and if you don't, you're in the same spot you were yesterday, right? So,
Right, and I think people talk about FHA loans, and I know there's some stigma around that, but a quarter of the houses that closed in 2020, a quarter of them were closed on FHA loans. Mm-hmm. Again, that's huge. It's about the same as 2019, but before those 2 years, it wasn't that high. So, people are looking out there. People are okay with FHA loans. It doesn't come with the history that people think it does.
No, I mean, FHA loans are a fantastic product. I mean, it really is. There was always, I mean, and I think that's kind of come around a bit, which is what you're seeing in your statistics of, they're for people with low credit or for people that, don't really qualify. And it's just not true. They have a little bit less stringent loan parameters, right? So more people can qualify. It doesn't necessarily make it a bad loan. It makes it so people that otherwise couldn't can.
Correct.
Nothing like that, right? You know?
Yep. So people are looking to, well, more people I wish were looking to sell because we need inventory for the buyers. But some people are saying, you know, what's it like to sell and buy right now? And I say, you know, some people are thinking the exact same thing and they're just not making a move at all because they don't want to be on that buyer side. So, you know, again, we have the lowest rates in history. They're getting, you know, high sale prices for their houses, sometimes over what they're asking, which is great for them. So it could be a double win. You know, timing's everything. Delays happen, as we know, in this industry. Things that maybe, you know, circumstances out of our control. So financially, if you're doing a sell and a buy, you know, you have to think strategically and sit with your agent and your loan officer and say, hey, can I pay 2 mortgages if they don't close simultaneously? You know, can I live with family? Can I potentially live in my old home before I buy my new one and do a 60-day rent back agreement with the new owner?
Yeah.
Could I do a bridge loan?
Yeah.
Tag, you're it.
Yeah, so there's a lot of options when it comes to that. And I'm using the example now. So, you know, so I've got somebody, when you're buying and you're selling, right? I mean, the stress of buying alone is enormous. Now, if you're selling and buying, now you got somebody buying your house, right? So if one small thing happens on the house you're selling, it delays the house you're buying, and it's a whole snowball effect. And then the house you're buying, there's buying another house, which is then delayed. So it's a whirlwind. It's crazy, and everybody goes a little bit more stressed than normal. But no, I mean, there are certainly options in terms of like qualifying without selling, right? And you talk about competition in the marketplace, like how attractive is your offer against 5 other offers when yours is contingent upon selling your home? You know, almost always they're going to take another offer. Like I've had my offer be 5 or 10,000 higher with a contingency, and they don't take it because the other person doesn't have it, just because they know.
Right.
You
They
know,
don't want that domino effect.
Yeah, exactly. Yeah, bridge loans can be a good option. You know, basically it's short-term financing that allows you to bridge that gap, like you said, for 60 days of, you know, staying in your house versus selling, and qualifying without necessarily having to quote unquote double hit them for their current mortgage and then their future mortgage. I always avoid it if you can, just because short-term financing terms just aren't as attractive. You know, higher rates, higher closing costs, higher fees, longer turn time, longer processes. So there are kind of ways within the guidelines to purchase without a contingency. It just depends on your situation. You know, so you can avoid a bridge loan, purchase without a contingency, depending on what type of loan you qualify for. So I always look at that as the first option, just because, again, in this marketplace, like whatever makes you the most attractive option for the person who's selling the house gives you the better chance to accept it. But yeah, I mean, if you can buy time to move out slowly and not have to worry about everybody closing on the same day and inspections, contingencies, all that stuff, it's just stressful.
Yeah.
Stressful, you know. But it's doable. I mean, I've got a lot of people doing it. I mean, they are seeing, you know, their values are going 5, 10, 15% more than what they thought they could get, you know, which equates to another $20,000, $30,000, $40,000 down payment, which equates to a lower payment on a bigger house than they have now, you know. So it's extremely attractive in the right situation. Again, it just depends on what you qualify for and what your options are. But yeah, the bridge loan's out there, but I always recommend as a last option if you have to, you know, just because of the terms.
Sure, yeah. But knowing there's options out there, I think sort of lets you breathe, because I think knowing that there will be speed bumps.
Right.
You know, it's not going to be a smooth ride. It's not going to be, but having the right people on your team will help you to understand that and get you through it, for sure.
No, and I mean, if you've got good agents on both ends and good attorneys, I mean, I've done plenty of dual transactions where they both close in 30 days and stress-free and easy enough. It's just a matter of, like you said, who you work with and how it gets handled, you know?
Sure.
But again, I mean, there is always that snowball effect of, like I have somebody now that we were clear to close on the house. They're purchasing in November. They were supposed to close November 12th. The house she's selling, they've had 2 buyers fall out for financing. Right, so now here we are. She should be closing on Friday. Luckily, I got the loan for the buyer now that's buying her house. So it worked out pretty well. But yeah, you never know. You know, I mean, could be smooth and easy, could not be. It just depends on who you have.
Yeah. things happen. So quick numbers, that was really it for the questions. And unless you have something else, I just wanted to go over quick numbers, 2019 versus 2020. So total units sold for 2019. So total houses sold were 4,240. But for 2020, they were 4,224. So there's only a 16 house variance there.
And that's what, like all of Western Mass or?
Yeah, Hampden County.
Hampden County, okay.
Yep. So it's not, it's not huge. You might think, 16 houses, but the amount of buyers that are out there, that's what's making that just 16 seem like so much. Yeah, and the average sale price went up almost $26,000 from one year to the next. So
yeah, and that's like we talked about, that's the scary part for buyers is they're all saying, hey, I'm overpaying. But in that same time frame, rates also went down almost a point to a point and a half.
Yeah.
So at that point, again, yeah, you're paying an extra, what, 25,000, but your payment's still lower on that same house if it does sell for higher. So at the end of the day, on the buyer side, it's not too much on the pockets in terms of the payment,
Yeah, when you're paying less for a house than you're paying for rent.
Yep.
Yeah, it's crazy.
Yeah. Well, you're building equity and
You are, and you're not paying your landlord to go on vacations and not fix your apartment.
Yeah.
Yep.
Thinking leaking for 3 months and you can't get a call back, you fix it yourself.
Yeah. I have a client that I was working with, and she said the same thing, that her landlord was having her fix her stuff herself. And I was like, bummer, that's why you rent.
Right.
So.
Yeah. Hope you're getting money off your lease. Probably not though.
Yeah, no, probably not. All right, Nick, you got anything else you want to chat about?
I don't think so. I think we covered pretty much all of it. The biggest thing I encourage people to do is just have the conversation. Like I said,
Absolutely.
get qualified for a mortgage, doesn't cost any money, make 10, 15 minutes of your time, but it could change your life. Like you said, the difference in owning versus renting, and especially in terms of what it does for your financial future. I mean, your house is your biggest asset, right? I mean, if you can get in and own a house, and if you can do it with little to minimal out of pocket as a first-time buyer, like I said, the worst thing that happens is you give me a call or you talk to Becky Jean and it doesn't work, right? And then you keep renting. But, you fail on 100% of the shots you don't take. So it doesn't hurt to try at least,
Yeah.
I encourage you, don't be scared. I mean, there's a lot of negative annotations about mortgage people and real estate agents and in general, but always talk to your family, friends, relatives, see who they used. Use somebody that you can trust, use somebody that has a good reputation, and they'll take care of you, and that's it.
Yep, definitely. And it doesn't cost anything. I talked to a renter yesterday. How much is this going to cost? It's not. And to have that information now, and if something is up, or you can provide guidance as a loan officer to say, hey, if you do X, Y, and Z in 3, 6, 9 months, then you'll be ready to buy, because they didn't know to take these steps.
Right.
That's great free guidance.
That's awesome. Like you said, I think you said what, 30-something% of people could potentially buy. Those other 60-70%, maybe they can't now, but probably half of them or a third of them or whatever, like with the right guidance and the right tools to get what they need to do, maybe 6-9 months down the road, they could, so you just never know until you talk to somebody, figure out, what it's going to take to get there. If you can't today, I mean, there's always a path somewhere. You just got to find it.
Absolutely.
All right. Well, I appreciate
thank you, Nick. I appreciate it. I think it might have kicked us off live, so I'm going to put this up as a recording anyway, because my Facebook was freaking out. So I appreciate it, and I look forward to the next break with you.
All right. Appreciate it.
Bye.